Friends, in this video for I Thought Wealth, I am going to talk to you on a topic, the obsessive mindset. Many people become so passionate about investing that they become obsessed with it. Often, the obsession is about how equity is the only asset class. Sometimes, it becomes more local about how only one sector or theme in equity is worth looking at. At times, the obsession becomes even more granular and descends to the level of one company. But the problem is that equity investing is so dynamic, it goes through so much of cyclicality, so much of changes. And markets always tire of a very popular thing. So, when what you are obsessed about stops being popular, you will have to come out of that obsession. That is why taking an extreme stance about equity as an asset class or any one sector or theme within equity or on individual stocks is never going to take us to a better place. In fact, mentally, it could create a sort of an illness. I have seen a lot of people who get obsessed about equity. They will not allow family wealth to go into any other asset class. For example, the spouse may want to buy an apartment or a better house, but the husband, who is equity obsessed, will not allow even a rupee to be moved out of equity. In fact, he would even use all his equity to leverage and further invest in equity. This keeps the entire family on tenterhooks. Nobody has any freedom to make any financial choice other than equity. This kind of equity obsession is there in a lot of people, and I have seen how such an obsession hurts the investor, his family, and his overall financial well-being. That is why one should understand that we must condition ourselves to look at all asset classes, to look at context in which equity is a superior asset class, and identify contexts in which other asset class are better. If we learn to do that, then our life would be better. Many people think that the greatest equity investors are actually obsessed about equity. They are not. Look at the amount of cash which an iconic company like Berkshire Hathaway holds. Look how much of money they idle so that they can take advantage of opportunity when it presents itself. Clearly, that idling money itself shows that they are not equity obsessed. They are more risk driven. And they manage their equity as an obsession in such a way that when valuation is cheap and in their favor, they turn on the obsession switch. They don't remain perpetually obsessed. That is the reality of the greatest investors in the world. So, it is delusory to think that we can be perpetually obsessed about equity and perpetually invested in equity, keeping all our money in equity. Similarly, it is a kind of an illness to be obsessed about one sector or theme and put all our money in that sector or theme. And in my view, it is a very sad mental condition to be obsessed about one stock. Avoid obsessional mindsets. Become more open to what is out of favor. Understand how cycles change, how the market will evolve and change its thinking. Stay always out of an obsessive mindset. Keep your construct open. Keep your mindset expanding and learn to take in new things, absorb them and assimilate them in ways in which you make superior financial decisions. By doing that, you will be able to get the full benefit of your equity investing, of equity as an asset class, of sectors, of themes, and some great individual stocks which come your way. You are not the promoter of any company. You are not emotionally or financially invested in any sector, nor is equity the only asset class for you. Break these myths and stay open to a better future. If you like this video, do share this video with your friends who are learning the ropes in equity, who are keen students of equity investing and who want to up their game. Stay the course with us on I Thought Wealth. Thank you.